Coming up today, the stock market gets spooked on Halloween. A look at Apple's and Amazon's earnings, the latest inflation data, geopolitical tensions rise, gold pulls back, and is this a buy the dip opportunity? It's all happening here today, guys. Let's go. And welcome back to the Daily Market Review, everybody. I'm your host, Jared. That's me on the left, sporting my favorite currency and having a bunch of fun, as we always like to do down here in Queenstown on Halloween. We go trick-or-treating around all the bars with lots of people getting in the spirit of things. But anyway, I'm sure last night wasn't as scary as it was for some in the stock market today. And it looks like we got that rug pull after all here on Halloween. How fitting. Markets just got a little spooked after some earnings. And even though the earnings have been good, sometimes we can see this as these earnings are used as liquidity events. And we just broke that month-long streak without a 1% move from close to close. S&P 500 down almost 2% today. NASDAQ triple Q's down 2.5%. It's actually mega cap tech taking it on the chin, down 3.9% as a group. And stick with me today because we'll come back to the indices a bit later on and I'll give you my opinion on whether this is a buy the dip opportunity over the coming days. Just as I speak, we've got Apple's earnings come out, which the market is reacting negatively to. There's a look at the numbers. Pretty good overall. Revenue up 6% year over year. It's a bit of a bump up what we've seen over the last couple of years. Good to see services up 12% year over year. Margins expanding. It's amazing. A company the size of Apple can still have an operating margin of 31% and growth in all areas. iPhone, MacBook, iPad, the watch and AirPods all growing up year over year. We just heard from Apple CEO Tim Cook saying sales of the iPhone 15 were stronger than 14 in the year ago quarter and 16 was stronger than 15. EPS came in $1.64 versus $1.60 estimated. Revenue beating by almost $500 million and iPhone coming out in front of estimates as well. It was a pretty good sign. Just looking at some other headlines we're getting, they did miss on China revenue. Pretty much flat year over year. Analysts were expecting 6.6% increase. Was a slight miss in services as well, and their wearable home and accessory sales fall by more than expected. So we are getting early signs that their iPhone business could be rebounding, something the street has been looking for. The new iPhone 16 models counted for 20% of total US iPhone sales in September. In China, they did better, but early demand signs overall for the iPhone 16 have been a bit mixed. So we've still got details coming in as I speak. They've just kicked off the earnings conference call. However, market's initial reactions, not so great, down almost 2% here after hours as I speak. Doing a lot better though, Amazon up a bit over 4% as I speak after they just reported earnings after the close today. And they too coming in with pretty healthy numbers. Revenue up 11% year over year. All categories growing. Unbelievable that AWS can still grow 19% year over year. The numbers these mega cap tech companies put out are just amazing. They're just absolute cash machines. They absolutely deserve the premium valuation. And for a large scale retailer to have an operating margin at 11%, once again, truly impressive. Looking at the numbers, earnings came in well ahead of expectations, $1.43 versus $1.14. Revenue beat by over $1 billion. AWS came in line as expected, so did advertising. And that certainly impressed the market. After a week regular trading session here today, which it closed down 3.2%, looks to have erased all those losses, and we could be firming going into tomorrow morning. We also just got earnings from Intel, which posted a staggering $16 billion loss as they've got big one-off charges from restructuring efforts as they're in the midst of a big turnaround. They think they can make earnings per share of 12 cents for the December quarter compared with the 8 cents estimate. So a significant improved outlook compared to what the street was thinking. And that's why we've got Intel having a nice pop here after hours. Currently up 9.2% as I speak. However, it was just up a bit over 15% about an hour ago. Currently trading around this resistance zone here. And just to let you guys know, I've just recently developed a new indicator you can see on the chart here called key S&R zones, key support and resistance zones. Something I've been working on for a while. It's actually a lot harder to code up than it looks. And so it's just as the name suggests, it's going to show automatically on every chart key support and resistance zones. Not just looking at where prices turned, but also doing a bit of a volume analysis as well. And so if you've paid for access to all my custom indicators, I think I've figured out the glitch in the TradingView backend, and you should all have access to this indicator in your account today. If not, please email me and I'll get you fixed up right away. However, this is going to help us all here in the Daily Market Review better visualize price and see where significant support and resistance zones are. So you'll be looking for a price to bounce off those zones, or if we get a break through it, that could be the start of a new trend as well. That's how you should interpret it. And you can see here on the chart, it actually takes the longest to load out of all indicators. As like I said, even though it looks simple, it was actually one of the most complex indicators to code up. But just moving on to what else is moving out there today. There's Meta. Even though it came in with really good earnings, it fell sharply today, 4%, as did Microsoft, down a whopping 6%. That's a huge move for Microsoft, finishing on the lows here as well. We've also got Coinbase taking a big dive today, down over 15%. And one of the best turnarounds I've ever seen, Carvana, up a whopping 19% today on their earnings. And let me just go out to a monthly chart for you guys. Look at that. We have to go to logarithmic to have a proper look at this. absolutely smashed in 2022, almost into bankruptcy. Stock got down to $3.50. Somehow managed to turn it around, start beating earnings expectations, and they're basically a used car vending machine. Big glass towers. Stock's gone up almost 100-fold since it bottomed in late 2022. Simply incredible. Also having a good day, Peloton on their earnings after we recently heard billionaire hedge fund manager David Einhorn taking a liking to the stock. It ripping up here today. Not doing so well, Uber. Stock I recently just added to my long-term portfolio a few weeks back. Even though they came in with a good beat. Like a lot of these big stocks, they're getting sold off pretty hard regardless of the numbers. And so I'm looking to add more shares to my long-term position down here in the mid-60s if we were to get down there over the coming days and weeks, as I plan on being a shareholder of this company for many more years. Also getting knocked hard again today, Supermicro Computer, after their auditor just resigned. And this is not good for NVIDIA, since they're NVIDIA's third largest customer, making up 11% of their revenue. NVIDIA falling significantly here today, but having a little bounce after hours in sympathy with Amazon. But once again, we've got semis trading heavy, just having lost their 50-day VWAP as a group today. But what really got hit hard today was the high beta stuff, high valued stuff, growth stocks, and the like ARK Innovation, which you could pretty much think of an index of overvalued stocks, down almost 5% today. However, like I always remind you guys, there's much more investment options out there than just US large cap growth stocks. Actually finishing the day higher today, Argentina ETF. My Argentinian stocks have certainly been doing well of late as well. Was a little bit of a defensive rotation because we got utilities popping up in a sea of red, with pretty much the only other sector, energy, closing up a little bit here today on the back of a bit of a bounce here in crude oil. And stick with me later because I'll get you updated on what's happening in the Middle East. It doesn't appear the war between Israel and Iran is over at all. And so like I've been saying lately, could potentially be some buy the dip opportunities in the energy sector. We just had a good earnings result today from ConocoPhillips. COP up 6.3% and Shell as well. Really strong day on volume, potentially setting up for some catch-up trades and some others out there, like Phillips 66. Actually came in with a pretty good earnings beat. Got my reversal signals firing off here. We got some good bullish seasonality and a similar setup for Marathon Petroleum as well, although they've got earnings in 5 days' time. However, you'll find that going into earnings, the stock can kind of discount itself and it offers up a premium. If the earnings aren't too bad, you can typically get that gap up if it's been indiscriminately sold off hard going into it. So potentially some buy the dip swing trading opportunities in the oil and gas sector. Also got DJT pulling back hard again today, along with gold. Been a bit of an everything rally of late. We got a bit of a everything sell-off today. Pretty big move there for gold, 1.84%. Same with silver as well, pulling back to its 50-day. And Bitcoin, just stalling out a little bit here at all-time highs. And you can see with my new indicator here, it's actually got two key resistance zones, which means there's significant resistance at this point here, 73,600 all the way down to 69,300. Just as it has before, price can turn off that area. Otherwise, if it breaks through, that could signal the beginning of a new trend. And I think this market, like many, is just waiting to see what happens next Tuesday, the US federal election. And speaking of federal elections, something I've noticed in Bitcoin is looking back at all the last elections we've had. November 2020, look at the run up in Bitcoin in the following several months after the election. Price pretty much tripled. Prior to that, 2016 election, there it is, early November 2016. Price ran up for a couple of months afterwards. Once again, more than tripling. And again in the 2012 election, November 2012, the couple of months afterwards, price absolutely shot up like crazy. And that's what my seasonality forecast indicator is telling us as well. Over the next 1-2 months, 21 trading days in a month, we've got bullish seasonality, and especially looking at election years, and especially for the first time ever, if we get a pro-crypto US government. Along with the explosion in global liquidity, if Trump wins, there's really nothing stopping this from marching towards 100,000. And looking back in history, that could happen by Christmas. However, technically speaking, we don't have the best crypto market breadth out there. Just looking at the second largest crypto, Ethereum, it's actually just bouncing off this key resistance zone here, sitting at the 50-day. It's actually been in a bit of a downtrend for the last 6 months or so. And there's a look at the crypto total market cap, 2.31 trillion. It too, kind of stalling, consolidating. It's really Bitcoin out in front here. But like all markets, to see a healthy bull market, you want to see wide breadth participation with the tide lifting all boats. So cryptos are definitely in play here over the coming days and weeks. Just like the entire market is. Option dealers starting to lift their implied volatilities up the front. We got the VIX 9-day index jumping up here today to 26. That's a pretty hefty handle, and actually above now the normally quoted VIX 30-day index. It too popping up to 23, and we haven't been above this level since August 5. We had that big rug pull day coming out of Tokyo at the start of the week. So we got a little bit of backwardation here in the volatility term structure. Option dealers telling us we may still have some more volatility in the coming days. And like I said, it was pretty fitting to kick this off on Halloween. And even though it's coming after the earnings, which the numbers are actually pretty good, EPS, analyst expectations going forward are still good. The capex of these hyperscalers doesn't look to be slowing down anytime soon. And online prediction markets are still pricing in a clear winner here. But this is the risk option dealers are pricing in. And I think the biggest risk is if the states aren't able to declare a winner this coming Tuesday night. Because if that's the case, it's more likely the Democrats will have won in kind of a repeat of 2020, which would kind of be mind-blowing to see someone who was actually polling at 4% in the last primary she ran in and actually had to pull out. And in that scenario, we could get a lot of volatility across all markets because we've got the potentially new incoming president, along with his vice president, going to be very pro-crypto and saying that Bitcoin will be made in the USA. But we'll come back to those charts in a minute. Just looking at some economic data we got today. Inflation rate in the Eurozone, hotter than expected, 2% year over year. And core PCE price index in the States year over year, bit hotter than expected, 2.7%, along with personal spending and initial jobless claims coming in better than expected. So in other words, US economy is still holding up, the consumer's still holding up and spending, and inflation is not ticking down. Of course, this is all a surprise to Jay Powell, right? Because he just cut 50 basis points last month and is set to cut again next Thursday. Also interesting to note that the 10-year bond yield in its path ever since the Fed cut is following that, very similar to of 1995 here in the purple. Bond yields actually shot up after the Fed cut. Back in the mid-90s, they achieved a soft landing. They brought down rates while economic growth and corporate earnings continued accelerating on the upside. The market didn't top out 5 years later. And there's a look at the 10-year. Little stretched here in the short term, just like TLT. Maybe showing signs of a little short-term bottom here. We do have some bullish seasonality coming in. Same with the dollar as well. A little bit of bearish seasonality. Still too early to tell though, as this has been a pretty strong move off those lows. We also just heard from the Bank of Japan. They kept rates unchanged at 0.25%, but said now the country faces smaller risks from the US and other overseas economies, signaling that the central bank is closer to an additional interest rate hike, possibly in the coming months. They're just got to keep an eye on their inflation, which has been ticking up, which I'm sure they're really hoping doesn't go up too much further. They don't really have a lot of room to move on rates. They think their core inflation will be 2.5% this year, and they're hoping going to go back down to under 2 next year. Just want to underscore the word hope, which is pretty much a part of every central bank's strategy. And there's a look at the dollar yen, which I'm pretty sure they don't want to see the yen weaken any further. So they'll keep hinting interest rate rises so we don't see the dollar yen go back to these levels above 160 like we were back in June before they came out and got all hawkish, caused a major spike in the yen. Moving on to commodities, and like I've been saying the last few days, maybe it was a buy the dip opportunity on oil, as I didn't think the war is going to go away anytime soon. Really sold off sharply to start the week after Israel responded to Iran, took out a bunch of military assets, their ability to produce ballistic missiles, took out a lot of the country's defense systems installed there by Russia, pretty much left them a sitting duck. However, we're now getting reports that Iran is threatening a definitive, painful response to Israel, likely before the US election, with the White House warning them to not strike the Jewish state. However, I'd be a little surprised if it did come in the next couple of days before the US election. I'm more leaning to what the open source intelligence monitor said today, that the attacks would likely happen after the US presidential election because Iran was concerned that another spike of tension and chaos in the region could benefit the former president and his re-election campaign, because I'd say Iran's more worried about the former president getting in than the current admin. But we're also getting reports that the supreme leader of Iran has got a terminal illness. He's in his 80s. His days may be numbered. And what you find with a lot of these old dictators, a lot of them are mentally vacant. They're only fed reports they want to hear, and they're quite often delusional. So maybe he does do something crazy. However, Israel, along with the Western Alliance, are just going to keep dialing it up back towards them. However, they should spare all their oil assets. I think their next response will be just to take out more military assets and potentially their leadership. Nonetheless, it's still enough to spook the market here. Keep a bid in crude. Plus, if the state's economy is going to hold up, and if China's on the cusp of a massive fiscal stimulus, maybe their demand can pick back up, and crude may be able to defend this big key support zone around $66 a barrel here. And any prospect of increased regional conflict over there should keep a bid in gold. However, it's just been running so well of late, shouldn't be that surprised to see a bit of a healthy pullback, at least to the 50-day. But what should help it hold up is if we get a pullback in the dollar. If the dollar's able to pull back, that should keep gold propped up, along with the market pricing in the prospect of inflation to return and geopolitical tensions that have well and truly not been resolved yet. Market's still pretty much pricing in the Fed will cut 25 basis points next Thursday though. even though we got a bump up in inflation. Yields have bumped back up. Economic data coming in strong and better than expected. Fed seems determined to get rates lower regardless of all that, and I think it's because of the huge interest expense. They're jumping on this opportunity to get rates down, even if just temporarily, so they can refi a lot of their debt, hopefully on the long end where they're really vulnerable, which you can thank Janet Yellen for, by the way. And just going back to Apple after hours, currently down a bit over 2% as I speak. Amazon holding on to those gains, now up 5.8%, and Intel continuing to peel back a little bit from those earlier highs, but still up a healthy 7.6%. And so we're likely to get a bit of a gap up tomorrow in Intel. However, really needs to take out that key resistance zone above 2467, and this could still be a takeover target. Other than that, we'll be looking at the jobs report tomorrow. Unemployment rate expected to come in 4.1%. US economy expected to have generated 114,000 jobs for the month of October. Finished here on a pretty heavy candle today on the lows on S&P 500. Same deal with the Qs as well, Nasdaq. But we are getting a little bit of a bump after hours. Whether that can hold or not into tomorrow's session will definitely be tested, especially depending on what report we get out on the jobs data. If it comes in too good, the market might have to reprice the chances of interest rate cuts. If it comes in bad, the market may get spooked about the economy. We really want the numbers to come in line as expected. However, going into the weekend, prospect of escalating war in the Middle East, the election on Tuesday, option deal is certainly pricing in some movement here and around the corner. Wouldn't be surprised if we get some more continued selling going into the weekend, if not on Monday. However, just as I've been saying over the last couple of weeks, I've been expecting a bit of a rug pull day before the election, and I'm going to stick to my guns that could set up a bit of a buy the dip opportunity tomorrow and Monday, regardless of the price action. Even if we just trade around a little bit, or if we keep selling off and dipping down, it'll probably be even a better buy the dip opportunity if we were to really get technically oversold in front of an election. But all that's pretty much a bet on a Trump win, because if they aren't able to decide a winner on the night, we could very well keep dipping. If not, think on the following Wednesday, we get a big fat green candle on a clean Trump win, and that buy the dip could potentially be hedged with a bet on Harris to win, as she's paying almost 3-1. Kind of bit of an interesting pair trade there. Buy the dip on stocks, along with a hedge on Harris. That pair trade may actually work out quite well come next Wednesday. Because regardless of election uncertainty, which is definitely a real risk for the market, what direction is US regulations and taxes going to go? Overall, the economy's fine, just as we've seen today. Consumer spending holding up. GDP still tracking around 3% annualized. High yield credit spreads, multi-decade lows. Bond market's totally chill. And the biggest companies in the world are continuing to print money and are expected to do so. So that's pretty much my read on the market. As always, you don't have to agree with everything I've said. You're welcome to share your opinion in the comments below this video and what you think about the markets and everything I've discussed today. Other than that, we'll see what jobs report brings us tomorrow, along with all the price action, and things could be about to get a whole lot more spicy. Kicked off here on Halloween. Thanks very much for sticking with Click Capital, and I look forward to breaking it all down again for you this time tomorrow. Cheers.